We're here on moneyshow.com with Robin Amlot. Hello, Robin.
Hello.
We're looking at projections for the UK economy, getting a little weaker, housing prices here either stabilizing or coming down by some reports, maybe interest rates falling. What does that mean for the UK stock market in the coming year or so?
We have a very nervy stock market. To a certain extent, if I could turn that question on its head, it's not so much what do they mean for the UK stock market as whether they will actually mean anything by comparison with other things that are going on. And the big thing that's still shaking out is what's happening in the financial services sector. We're seeing otherwise rock-solid institutions with their marble porticos trembling in the aftershocks of the credit crunch and the run on Northern Rock in the summer of 2007. We're looking at a situation where institutions that have been highly respected are maybe discovering that they have feet of clay. The Ozymandias Bank of Banks is looking on our works and we're despairing. The issue is how much of an impact is what's going on in financial services itself, in banking itself, going to have on the rest of the marketplace. That's a key point. Provided that the fallout there is kept to within the banking sector, then there's not going to be too much pain, because of course what also happens is if the banks are in trouble, they're not going to be lending.
That's right.
They're not going to be offering the liquidity that other people need. They're not going to be helping people fund the M&A activity that has been driving some of the market valuations we've seen over the last few years. So if the bankers are feeling the pinch and they're not offering the lines of credit that other people want so they can do their activity in the stock market, then it starts spilling over into the market as a whole. Perversely, however, of course, if interest rates do come down, as we expect them to, that actually should be good news for the stock market, because it's going to have more people looking for value in the market because they'll be looking for a return that they may not be getting on their cash reserves.
Now, just very quickly then, the same question that people are asking in the US. Can the UK market advance if the financial industry, which is so important to this economy, remains on its back the way it has been?
Gosh, I think if I knew the answer to that with any degree of certainty, I'd probably keep it to myself. But in all seriousness, it is the big question. I believe there are certain sectors in the UK market that, yes, obviously there are defensive sectors in every market that are always going to be stable, are always going to give value, are always going to generate income for people. But at the same time, we do have to wonder whether 2008 is going to be a year of marking time for the markets, because we have been, despite the ructions in the summer of 2007, we have seen the stock market towards the end of the third quarter of 2007 into the fourth quarter, we have seen it close to record levels, which has taken some people by surprise, but it is a home for people's money, and there are still companies out there making good profits and offering good dividends.
Thank you. We've been speaking with Robin Amlot on moneyshow.com.